The bottom is about to fall out of the US housing market. Home prices are going to go down by a lot more over the next several months because the leading indicators of home buyer demand in America, they have plummeted over the last several weeks. The National Association of Realtors, they just reported that existing home sales in America in September were around 4.7 million. Well, mortgage purchase applications, which are a forward-looking indicator of home sales, have just crashed by even more, suggesting that we could see by November or December the lowest level of home buyer demand in America we've seen since the spring of 2008. And prices, which have gone down by a lot in certain cities already, are going to go down by even more. If we take a look at this map showing the decline in home values in America, according to Zillow, we can see so far most of the decline in prices has been on the western half of America, which you could see is in orange. Metros like Austin and Phoenix and Vegas and San Francisco have had the biggest declines, while the southeast and parts of the Midwest and the Northeast have done better. However, that ends over the next couple months, everyone. The Northeast and the Southeast are now being dragged into this crash as well, particularly Florida. The home buyer demand metrics in Florida have dropped off the table. For instance, pending home sales in Naples, Florida are down 73% year over year, a 73% reduction in buyer demand. Meanwhile, pending home sales in Jacksonville, which wasn't affected by the hurricane, are down 51% year over year. So as I said in a video a couple weeks ago, the Florida Delusion, it's over. The investors and the second home buyers are not rushing into this state anymore, and that's going to mean big price declines in Florida are coming over the next several months. Another Southeast market that started to take a turn for the worst is Nashville. In Nashville, the pending sales have plummeted to down 40% year over year. And what's scary in Nashville and many of these other housing markets in America is that not only is the for sale housing demand declining, we also have rental demand in a free fall. We have a double-barreled housing crash occurring where housing demand on both ends is at the lowest level in 3 decades. Take a look at this article from RealPage that manages over 10 million apartment units. They are reporting that the third quarter of 2022 in America was the worst leasing demand for apartments in nearly 30 years, which is shocking, everyone, because the conventional wisdom suggests that a decline in demand to purchase homes means that rental demand should increase, but that is not what we're seeing. We are seeing housing demand plummet at all levels, which is a signal that the recession is much worse than people understand right now. Because housing demand, that's telling you how the economy is really doing. And if housing demand for buying and renting is at multi-decade lows, that shows that the economy is in the tank and that this low unemployment rate of 3.5% is not going to last for long. The other important thing to understand about this decline in the rental market is what it suggests about inflation. Because a big part of the inflation calculation is rent. Over 1/3 of the government reported CPI inflation comes from rental inflation. So if the rental demand is tanking and rents are going down in America, which they are, that means that inflation will go down into the future over the next, let's say, 3 to 6 months, which means interest and mortgage rates are likely to go down as well. So I want you all to be paying close attention to this rental market because it has huge implications about what's going on in the economy and with interest rates and Federal Reserve policy. And where are the rental markets in America that have actually gone down the most over the last 6 months? You guessed it, they're in Florida. Tampa, Fort Lauderdale, Orlando, Jacksonville, West Palm Beach have the biggest increases in vacancy to go along with Phoenix and Las Vegas in the Southwest. Which is really fascinating, everyone, because if you go back to the last housing crash, what were the cities that crashed by the most and what were the cities that crashed first? They were in Florida, Nevada, and Arizona, and it looks to be, at least on the rental side of the equation, the same thing playing out right now in 2022, entering 2023. Now, an interesting question actually that I know a lot of you have and have asked me in the comments below is you said, Nick, how is this possible that at the same time demand to buy and rent homes is going down? And that is a great question. I believe the answer has everything to do with something called multi-generational living. I think we are seeing a big increase in people moving back in with their family, whether it be their brother and sister, whether it be their parents. A lot of people over the last 2 years, due to this raging inflation, cannot afford to live day to day on their own in their own apartment anymore. So they are now moving back in with family. Maybe they're moving back in with friends and getting a roommate. Another factor is that during the pandemic, there was a big increase in breakups and divorces that caused people that were living in one housing unit to all of a sudden live in two housing units separately. And it seems like now people are back forging romantic relationships and moving in together. And I think these trends are good for society at large as well as the rental market because it eases the burden on housing demand while helping people connect and be closer together. And this scares the big corporate real estate investors more than anything else, that people don't think that they have to live on their own anymore, that they could live with their friends or family. Because it basically means that the investors now are having a difficult time monopolizing the rental market. We're seeing in those cities like Vegas and Phoenix huge cuts in rent. These corporate investors are really freaking out because they have to contend with declining rents to go along with declining prices. And we're going to see prices decline by even more into the future in the markets in red on this map. These are the ones where the pending home sales have gone down the most in America over the last month. We talked about Florida, especially Southwest Florida, how the sales are way, way down. Let's talk about actually the Northeast, because I said this earlier in the video. The Northeast now is starting to show weakness. This was kind of the holdout housing market. States like New York and Massachusetts and Pennsylvania, prices weren't really going down. The buyer demand was still there, but now the buyer demand is absolutely collapsing. I mean, take a look at this. Philadelphia and Montgomery County were now down 30% year over year on pending home sales. In Nassau County and Long Island, we're down by 31%. In Providence, Rhode Island, we're down by 34%. If we zoom on down south to DC, DC pending sales are now down by 42%. So I'm predicting we're going to finally see these price declines start to hit the Northeast throughout the end of 2022 and into 2023, which is welcome news if you're a home buyer in these areas. Additionally, we got to talk about California, everyone, because California, it's where most of you guys live who watch me. It's the biggest state in America. It's the most expensive housing market in America. What's happening in California? Well, these pending sales are collapsing pretty much more than in any other state. We can see in San Diego, they're down 49%. In Sacramento, they're down 51%. And in Oakland, they're down 44%. And this collapsing buyer demand in California is a big problem because prices were already going down by quite a bit in California. If we take a look at this list of the 25 fastest housing crash markets this year in 2022, where prices have gone down the most, what do you see? 10 of the 25 metros on this list are located in California. San Francisco values are down by 8% according to Zillow in 4 months, which annualizes to 24% over the course of a year. In LA, they're down by 6.5% over 4 months, which annualizes to 20% over the course of the year. And as we go down this list of the 25 fastest housing crash markets, what do we see? If the metro isn't in California, it's in a California tangential metro like Boise, Reno, Portland, Denver, or Seattle. And so the relationship that explains where home prices have gone down the most already in America is a simple one. It's the cities with the biggest exposure to tech, the most remote workers, and where home prices are at the highest levels to begin with. But as housing crash is now spreading, the buyer demand is declining not just in the western half of the country, but all across America. So get ready for big home price declines throughout the rest of the fall and into the winter. And if you are someone who is still skeptical that this housing market is crashing, I would just encourage you to look at the data on mortgage applications. We are at the lowest level since 2008 in mortgage purchase applications. Literally the worst home buyer demand since Lehman Brothers, which is occurring alongside the worst rental and leasing demand in 30 years. And so that's some real-time data to take to the bank to tell you that home prices are going to get cheaper. Don't buy today. Wait to buy. It's going to be a better opportunity in the future. And oh yeah, your rents are going to get cheaper as well.